traders, and welcome to a new video on living off of day trading. What we're going to look at in today's video is the most common question that I get with emails and direct messages, which is it possible to make a living off of day trading? And I could throw statistics up, I could throw lots of quantitative data, but what I want to look into today is the reasons why many fail and the reasons why a few succeed. How to discover an edge in the market that you can get, and how to actually make day trading a full-time profession. Let's get into it. Before we get into it, I have released my price action volume guide, and if you're interested in learning how to trade like a market maker and take advantage of other retail traders and find a way to hone your edge by trading a little bit differently, then you can click the link in the description below to learn a little bit more. This guide also comes with access to a professional trading group that I've created, so you can get that as well. When I first created this, I think it was 10 reasons why many fail and 10 reasons why many succeed. Why some succeed, many don't succeed in day trading, in professional trading. And I've just whittled this down to 3 reasons why many fail and 3 reasons why just a few succeed. Now, one reason why many traders fail to make consistent income in trading is a lack of an edge. This is lack of a strategy that has a clear, definable advantage in the market. Well, what is an edge? Well, take a look here. There are 3 different types of edges that you can get in the market: speed, market share, or information. Speed edge is, imagine that you have the ability to think and trade faster than anyone else. Well, probably wouldn't be you, it'd probably be a high-frequency trading bot or algorithm. But let's say your algo can adapt to market conditions or take advantage of mistakes that other traders make lightning fast, at very low latency. Then that gives you an edge. Let's say that one very, very common speed edge is latency arbitrage. So, I mean, that sounds like a lot of financial jargon, but what some traders can do is, if Bitcoin is rising at other exchanges, you can get a bot to market buy another exchange with the expectation that Bitcoin on your exchange will follow what other exchanges are doing. And the second edge, because the first edge can be hard to get, and it's just an arms race. It's a competition to who can get the lowest latency, who can have the fastest bot. The second edge is something that's borderline illegal. I'm just putting it here not because it's really attainable by many, but because it is an edge, and I do have to mention it. Market share edge. Imagine that you have an altcoin, and this altcoin has $2 million on the order book. Just $2 million. So the bids and offers total to about $2 million worth of capital of that altcoin. However, one trader accounts for 50% of that volume. $1 million of that order book volume is just coming from one trader. That trader just about has a monopoly on that coin. Now, what can they do with this advantage? And of the 3 advantages, this one's probably, I would say, the easiest to exploit. If that trader carries 50% of the volume of that coin, if they wanted to profit, all they'd have to do, place a lot of limit sell orders, market sell a bit, and spoof the market lower. They move the market lower, and then they pull those sell orders, they buy, and then they spoof the market up higher. And then they take profit, and then they spoof the market lower, and they buy at bottom level rates, and they spoof the market higher. They sell at a profit, and they just can continue to do this and continue to manipulate the market to just endlessly profit. So if you or if anyone has a massive market share on an altcoin, or on even on a major cryptocurrency, which I don't know, then you could have the ability to just push the market and bully the market into the direction you want it to, and take advantage off of the speculation from the difference in the starting point and the end point. But that is something that's illegal. I mean, there's spoofing, and there's many other moral issues with that as well. Now, the third edge is really the edge that I want to talk about the most, and the edge that professional day traders that I know would actually want to go for, the information edge. So this kind of edge is not looking to be faster than everyone else, or not looking to really control the majority of the market that is being traded. It looks to understand the market better. It looks to be able to get knowledge on how many people want to buy and how many people want to sell within that market. Now, any information that gives you advanced ability to find how many people want to buy or how many people want to sell, that is going to give you an information edge. Now, if I ask you, explain to me in 1 to 2 sentences RSI on Bitcoin, 5-minute time frame. Tell me how that actually can lead to an information edge. What extra information is that giving you? Some traders may reason it this way or reason it that way, but to be honest, I know I did make a video on RSI a year and a half ago, but RSI is probably not going to give you an edge good enough on Bitcoin to be able to trade full-time. I think that's a fact. I mean, maybe you could find a way with proper risk management, but RSI is really not going to give you concrete data on how many people are going to buy or going to sell that coin, and meaning, how likely it will go up or down. Now, if I was to tell you, if you were to ask me, all right, Bennett, explain your edge of what you do in 2 sentences or less. Well, I would say, with a lot of commas in these sentences, of course, but I would say I use order depth and I look at the MDR. So that's the market depth ratio. And what I'm looking at is how many traders have indicated they would like to buy and how many traders have indicated that they would like to sell. This way I can gauge the supply and the demand on that coin and in the market. With that information, I am able to buy before others buy and sell before others sell. That's the edge. Simple as that. So that's my information edge that I have in the market, is by looking at the order depth and by being able to buy before others buy and being able to sell before others sell. And there are many other kinds of edges, and I highly recommend looking a little bit deeper and trying to find, does this strategy actually make sense? Does this strategy actually give me a big advantage in the markets? One way to check that is to go to another trader and also go to someone who doesn't know anything about trading. To the trader, explain to him or her the edge that has in the market, using the jargon that you know. And then go to someone who knows nothing about trading and try to simplify your edge within 2 sentences to something that can make sense to anyone. And if both think that, that edge makes sense, then you may just have a pretty good edge on your hands. So those are the 3 kinds of edges that you can have, and it's that third edge that I typically like to look for. Now let's go into the other reasons why some traders fail. Besides lack of an edge, the inability to control trade risk is going to lead you to burning your entire account. This is when you take a trade, 2% stop loss, right? Price goes down 1.9%, and then you cancel your stop loss. Price keeps going lower, and you're trapped on that coin. You don't want to sell because you'd be selling at a loss. It's this kind of thought process that happens to a lot of traders. And if you want to be professional, if you want to do this full time, consistently, buying a coin and then just holding, hoping it will go higher, is probably not going to end well for the most part. Because even if it does end well for one coin and you make like a break-even 1% profit, you're going to do it again. Then in the next coin, it might do the same thing. Yeah, maybe you get 1% on that one, but eventually you're going to hit a coin that goes down 99%. And then at that point, what do you do? So this is why you need to be able to control your risk. And a reason why some succeed, why a few succeed, are they can tell me exactly how much risk that they're taking. I can go up to a professional trader and say, tell me how much you are going to lose on this trade if it goes south against you. And they could say $950 immediately. They could just tell me that immediately. Why? Well, because they have a stop loss set. They've incorporated the commission, the fees that go into that stop loss being hit. They know how much of a percent loss would lead to how much capital they would actually lose in their account, and they can tell it to me. But a retail trader who doesn't know how to control their risk may say, I might lose 50, I might lose 100, but in the back of their mind, they know that this trade's either going to be profit or they lose everything. You can imagine which trader is probably going to do better, just from a risk management, not even talking about edge. But risk management is key. And I know that every single trader, every single mentor, everyone talks about risk management. But there's a reason for it. There's a reason why it's such a hot topic. It's because it's one of the largest reasons why so many traders aren't able to profit consistently. Now, the third reason is some traders think that I just put an hour a day and I'm fine. That is absolutely not true. You need to be constantly learning, constantly practicing, and adapting to the market. Because if you're not practicing your strategy, if you're not practicing mock scenarios and looking for how you can raise your edge and looking for what you can do better in the future on your future trades, then you're probably not learning enough, and you're probably not going to be doing well in the future. Now, let's go down to what a professional, successful, consistently profitable day trader might do. Practice routine daily. What does this mean? This means that within 1 hour, they set an alarm. So they say, okay, at 9 a.m., I wake up at 8 a.m., I do whatever, and then at 9 a.m., I have practice from 9 to 10. Just like how a tennis player, like a basketball player, chess player, they have practice, playing the violin, all these things, they require practice and time. And that day trader, that professional will say from 9 to 10, I am just going to practice this strategy by using this method and by checking myself this way. Why do I practice that way? Well, because it's going to lead to better pattern recognition in the future. And not only that, but after they make a trade, they journal it and they keep track of all their trades. So these are the reasons why I found some will succeed and many will fail. And if you find yourself doing more of the 3 below, a proven edge, risk on trade is controlled, and you practice, your odds of success are going to be significantly higher than if you don't understand your edge or don't even have one, you don't know how to control your risk, and you never learn from your mistakes, and more importantly, you just don't practice. The results are going to speak for themselves. All right, now let's go into components of the information edge. This was something that I just touched on about 5 minutes ago. What is necessary to actually hone in on this advantage? What can we do to understand that we do have an information edge? Besides just the 2 sentences, explain it, because that is the first step. Here's the second step. I don't care what you're looking at. It could be anything. For me, it's order depth, and I really like to look at that. For you, it could be sentiment. It could be kinds of advanced volume, looking at market buy versus market sell ratios, put call ratio. One, is it meaningful data? So do you believe that the data that you're looking at has a meaningful enough impact on predicting the future of that market? 2, do you have the appropriate knowledge to understand that data and to be able to glean something from it? And 3, execution. You're able to understand the data, you're able to interpret the data, and then are you able to actually trade off of that? You need all 3 to be successful with an information edge. If you just have, the knowledge, but your data is bad and you don't know how to execute, that's probably not going to go too well. If you have very meaningful data, beautiful, great data on the market, but A, you don't really know what to do with it, and B, you aren't able to execute on it, then that will probably not end well. Or, which is pretty common, let's say you have meaningful data, and let's say that you have the knowledge to adapt that data, but you just don't know how to trade off of it. Bad risk management, or you're just scared, or emotions or something, your execution's just off, then you're probably not going to be successful with the information edge. You need all 3. Now, you may say, well, what can I actually do to increase my ability in each of these facets? Well, meaningful data, you need to look around and find what data actually does lead to predicting the market in the short term, medium term, and long term. That may take some time, and you may even have to build your own models, but do take the time to get meaningful data. 2, appropriate knowledge, and this one can really be worked on. I would say the number one thing to do if you want to hone in on your information edge is practice. Look at historical patterns of that indicator that you're looking at that, let's say, order depth for what I do. What I do is I cover up what happened in the future. I look at historical order depth. I make predictions on the historical data, and then I see if I'm right. And it's through that way that I'm able to practice and increase my knowledge and increase my pattern recognition of that data. 2, another thing you can also do to increase your knowledge in data is, of course, reading articles, watching videos, but more importantly than that is probably finding a mentor or finding a trading community that can quickly increase your knowledge with data. Because if you have meaningful data, it's only as useful as the trader who's looking at it. And if that trader doesn't know what to do with it, then the data is useless. 3rd, execution. How can you become a better executor on data? Well, I would say take low capital trades and treat them as practice, meaning You trade with a $50,000 account, I would say take trades from like total trade size of $500, $1,000, just very small trades, where you're not really looking to make a large profit. You're just looking to use this indicator in a strategy and to begin to execute on it. This way you're practicing. And I say practice because your profit and loss is probably not going to be that big. On like a trade of 500, you may lose, plus 2% minus 2% is $10. You might make or lose $10 on a count of $50,000 isn't going to change anything. So through this, you can become a better executor on this data. And then if you become very comfortable and you say, hey, I actually have gotten a lot better at executing on this indicator or on this data, then you can bulk up and trade with that, larger account size, maybe even up to $50,000. Trading as main income. Trading as main income is something that I wouldn't recommend to many. I think that if you actually want to do it, you may want a consistent revenue stream. So this is something that I'm just draw a very simple schematic. A consistent revenue stream means that each month you are making money regardless of trading. And this is just going to keep you afloat. And then what you can also do is, let's say trading, you do have an edge and you have proper risk management and you do well for yourself. Some months you may be up, great. And then, let's say month 2, you're down a bit. And then maybe month 3, you're up a bit, you're here, and then by the end of the year, maybe you're, up here. Well, each month, your overall, gain in capital, of all your money that you hold, not just trading capital, would just be, let's say that this is not a well-drawn schematic in the slightest. I will say that. Month 1, let's say your profit's up here. It would be this. So that let's say you make, $2,000 a month in a revenue stream, but from trading you made $5,000, then $7,000 there. Let's say you make another $2,000 each month, but then you lose $500. Then you make $1,500. Let's say you have even better month, and you make $2,000 again, from that consistent revenue stream. But here you made like $6,000, and then so on. Because sometimes your consistent revenue stream of $2,000, but you lost $1,000 in 1 month, so you actually end up only making $1,000. That's a lot better than actually just trying to live completely off day trading, because those months where you're down and you can't really pull out a salary, take money out of your trading exchange and put in your bank account every 2 to 3 weeks because you lost money and you can't really afford to do that. I mean, what else are you going to do? So I would recommend, maybe work a 9 to 5, and if that's too much and you really are serious about day trading, find another way to make consistent revenue. No matter how small it is, it's going to go a long way, and it's also going to make you feel more secure and not be terrified of losing money. Because if you're terrified of losing money in your day trading, that's just not going to end well. That's going to lead to you just holding onto a trade and never taking a loss. Second thing that I would recommend is futures leverage trading. So with futures and with leverage and with margin trading, you have the ability to leverage up your capital. That also means that your losses are magnified. But if you have $10,000, it's kind of hard to make, a 20-30% profit every month. But if you're trading with $10,000 and you're on higher leverage, let's say you leverage that up to $50,000, then it's going to be a little bit easier to make or lose a lot of money, which means it's going to be a little bit easier potentially to pay the bills. So I think that it's not required to do futures trading or leverage trading within crypto, but I think that versus just trading altcoins, I think that there is probably more sense to go the leverage trading route. Do be very careful though with leverage trading, because that is a quick way to lose all your money if you do not have 100% control over your emotions and 100% control over your risk. Your salary can be paid whenever you want. The great thing about being a professional day trader is you could take out your profit, every 2 months, every 10 days, every 3 weeks, or whenever really it suits you. But having a consistent schedule to pull out your profit can be pretty nice. Now let's look on living on trading. So let's zoom out from just trading and see what else can you do. One popular method that you can do is to live with other traders. So let's say you move in with a trading house or trading apartment of three other people. Then you can split rent. You can build each other up. You guys can work on strategy together. Split groceries, split everything. Understand what each other are doing. Have the ability to comfort each other. When some big losses occur, have the ability to really build each other up. That's one thing you can do, because trading can be very lonely. And I think that living by yourself trading is, not really the lifestyle that I would love to live. I would rather be traveling or living with other people. But it can make it a lot easier financially. And also you can just become better strategically in trading if you can live with other traders. Point 2 just goes back into the point I made here with the consistent revenue stream. I think that working a side job and the discipline that's required to work a side job and also have the full-time job of day trading, I think that's a pretty good combo. No matter what the side job is, I think that doing those in tandem can lead to just better results by the end of the month, by the end of the year. 3 and 4 are really about cost of living. It may be better to, if you're really serious about day trading, you may want to move to a place with a lowered cost of living. Because if you're expected to pay, if the average cost of living is $100,000 in an area, and you're planning on making about $20,000 to $30,000, that's going to be a problem. So you may need to move or find another way or find side income. But be rational about this and live in an area that you can afford. And of course, when you're starting out with day trading, losses are probably going to occur. So try to live frugally. All right, guys, so these were my tips on just what I think are the best ways that you can hone in your edge and you can be more along these lines and less along these lines. And if you guys have any more to add in the comment section below, by all means, go ahead. And if you are interested, you can join my professional trading group that offers lifetime access to a group of traders where we all talk about the market daily, we talk about strategy, and we try to build each other up with practice examples and with looking at each other's analysis. And if you're interested, just click the link in the description below. All right, guys, I hope that you guys can end up here and not end up in this region. And to answer the question in short, yes, it is possible to make a living off day trading. And I am 100% confident that there will always be people out there, even retail traders, who will be able to do this professionally and make a consistent profit. It really just comes down to the two main things are have an edge, understand your edge. That's one. 2, you got to control your risk. And you've got to control your emotions within that risk. If you can do those two things and continue to practice on the side and hold a side job or find some way of consistent revenue, then this can be as lucrative of a career as you want it to be. All right, with that, I wish you guys the best of luck and happy trading.